Now, those of us with a bit of life experience would remember the days of sky-high inflation. In Australia, back in 1974, it peaked at a whopping 15.4%. And incredibly, it got to that figure from a negative inflation rate just a couple of years prior. That's right, inflation was negative in 1962, and then it went to this 1974 peak of 15.4%, and then it took a decade to drop sustainably under 10%. And it took several decades to get back to where, somewhere where it was in the low 3s or 4s. Now, there are people out there who are warning we face those days again. And a reminder, we had a negative inflation quarter in June of 2020, and inflation is now starting to rise in this country. But we're not alone. In fact, we're actually much better off than in many places. The United States official inflation rate hit a 41-year high this week of 8.5%. Many will say it's much, much higher, but the figures have been gingered up. In Germany, wholesale prices have jumped 22%. And in the UK, they've just recorded a 3-decade peak of 6.2%. Inflation is a monster that is now starting to devour the world. So where did it come from? How long is it going to stay? What can we do about it? And most importantly, how can you protect your livelihood from this silent wealth killer? Well, joining me now is a man with a strong contrarian point of view on investment markets, and he's going to talk to me about what we can expect. That's Greg Canavan from Fat Tail Investment Research. Greg, it's wonderful to have you on the show. Thank you for joining me. How much of a problem is inflation in Australia and around the world?
Yeah, g'day, Cory. Look, it's certainly a problem right now, and it probably will be a problem in the next couple of months. But the way I've been explaining it to our readers is that I think the inflation phenomenon is peaking because there's so many one-off factors that have gone towards creating this inflation problem. The biggest one, obviously, is the COVID shutdowns. That's created all sorts of supply-side issues. You've also got the major problems that have been brewing in oil and gas markets for many years. And as you'd be well familiar with, in the West, we've shut down exploration for oil and gas. And, with the green activism, banks aren't lending to oil and gas companies. And that's created a supply issue that's been brewing for a long time. And then you have, obviously, the Ukraine-Russia situation at the moment, which has caused this huge oil price spike. That is just feeding into these issues. On top of that, that's the supply side issue. On top of that, you've had massive fiscal and monetary stimulus that's come from the COVID shutdowns, and that's created a huge demand side inflation as well. So a lack of supply, huge additional demand has created almost a perfect storm for inflation. My argument is, on the other side of that, the world has still got a huge amount of debt. And the US central bank is looking at this inflation problem and saying it's actually a political problem. We've got midterm elections coming up in November. The Biden administration understand that this is a political issue. They've obviously been in the Fed's ear and said, you need to raise interest rates. And if you look at the message from the bond market, 10-year bonds in the US are still only around 2.8%. So they're not overly concerned about this inflation problem being a long-term problem. Otherwise, bond rates would be a lot higher. And just a couple of weeks ago, the yield curve in the US, which is a leading indicator for the likelihood of the probability of a recession, inverted. And when that happens, that suggests that the US economy is on a path to slow down. So my view, let's call it another 4 to 5 months.
Greg,
I think...
Can I just jump back then? In the 70s, I think it was, you had high inflation, you had stagnant economic growth. It sort of was talked about as stagflation. That's the worst of both worlds as far as I can see. Is that a risk on the horizon? Yep. And whether you agree with that scenario or not, what should people be doing with their money? What are the safe havens in an uncertain world like this?
Well, look, I think the primary safe haven for me is gold. And just in the last few weeks, gold's gone through a big correction over the past 18 months. But just in the last few weeks, gold prices started to turn back around, and Aussie gold stocks have started to move off their lows, which is a really good indicator for me that money's moving back into that sector. Bitcoin, cryptos is obviously going to be a store of value. I think moving forward, because the whole monetary system's in a complete mess, and this is a new free market system of money that's developing on the back of that. But our advice on that front is to dollar cost average into that market because it's so volatile and so dangerous. But certainly for me, gold and gold stocks throughout history, they've been a good protector of wealth in inflationary times, and I don't think that's going to change at all.